Good morning, students. Welcome you all once again on the live virtual revisionary class on Ind AS 38 Intangible Assets. Friends, today since it is a revisionary class, so quickly I'll take you through with the concepts and then I'll discuss some of the detailed or complex questions around Ind AS 38 to have you take you through with the revision on this particular standard. Students, quickly we'll be touching upon objective and scope, right? So basically it's a very simple why this standard has been introduced. This standard has been introduced for the purpose of accounting of intangible assets. When I say accounting of intangible assets means this standard prescribe the recognition of intangible assets. This standard prescribe the measurement, presentation and disclosure of intangible assets. These are the area which is prescribed by this particular standards. Scope, this standard is applicable to every intangible asset. This standard is applicable for every intangible asset except few intangible items which are prescribed in some other standard, right? Few intangible items which are prescribed in some other standard. For example, deferred tax asset. Deferred tax asset is an intangible item, but it is covered under Ind AS 12. It is not covered under Ind AS 38, right? Financial instruments, financial assets, it is covered under Ind AS 109. So there are a lot of intangible item. I am not using the word intangible asset. There are few intangible item which is covered under the specific standard. Insurance contract. These contract are intangible items, but it is covered under Ind AS 117. Okay. So we finish off objective and scope. Friends, we'll spend some time on the definition of intangible assets, right? Then we'll discuss the recognition criteria. After understanding the definition on the intangible assets, we will be covering the recognition criteria. When an intangible item will be recognized as an intangible asset in relation to this particular standard. Then we'll be talking about the initial recognition, when an intangible item is going to be recognized, at what value it is going to be measured, and this measurement will depend on the mode of intangible assets, right? How you are acquiring your intangible asset. There are various modes of acquisition of intangible asset. We'll quickly touch upon the mode of intangible asset, and then we will be discussing about the subsequent recognition. When I say subsequent recognition, I mean to say on the reporting date. On the reporting date, what you are doing on the reporting date, you are amortizing the intangible asset. On the reporting date, you are computing the carrying amount of the intangible asset, either using cost model or revaluation model. Then we will be discussing amortization and useful life of the intangible asset. How an intangible asset is going to be depreciated. Depreciated means amortized. And what will be the useful life of the intangible asset? We'll be covering all those aspects. Before getting into the presentation, I will be sharing my Excel file, and through the Excel file, we will be completing this entire revision of intangible asset standard, and then we will be covering the detailed or complex question around intangible assets. Friends, in India, we have accounting standard. In accounting standard, we have accounting standard 26 on intangible assets. In IFRS, it is IAS 38. IAS 38 also covers intangible assets. Okay. In Ind AS, we have adopted Ind AS 38, which is a converged version of IFRS applicable to India, right? We discussed the objective and scope of the Ind AS 38. Now, first of all, we'll discuss the definition of asset. Then we'll move to the definition of intangible asset. Friends, what is the definition of asset? An asset is a resource controlled by the entity. I hope my Excel file is visible, Saminathan.
Yes, sir. Good morning, sir.
Good morning. Yeah. An asset is a resource controlled by the entity. Liability is always an obligation. Asset is a resource, okay, which is controlled by the entity. The word control is very important, right? It is a resource controlled by the entity as a result of the past event and which leads to future economic benefits. So what is meant by as a result of past event? You purchased, you purchased a software. You purchased a tally software, tally ERP software, right? So whether if you purchase the tally software, are you controlling the tally software? Means your company has a control over the tally software? Of
Yes,
course,
sir.
yes. Why? What is the past event? What is the past event which you have done due to which you got the control over the tally software?
Yes, sir.
What is the past event?
We purchased that
Purchase,
telesoft.
purchase, payment of consideration, purchase of software is the past event which you have done in the past. You paid a consideration, you purchase a software. That is why you got a control over that software. And whether this software is leading a future economic benefit, answer is yes. You will maintain your books of accounts. Okay, you will maintain your documents, data. So it will give you future economic benefit also, right? So what is an asset? Asset is a resource controlled by the entity as a result of past event, which gives you future economic benefit. Okay. Now, what is the definition of intangible asset? Intangible asset definition covers three parts. Intangible asset is an identifiable, non-monetary asset without having physical substance. What is the definition of intangible asset? Identifiable, non-monetary asset without having a physical substance. These three words are the definition of intangible asset. Identifiable, non-monetary asset without having a physical substance. Now, let's understand in the reverse order. What is meant by without physical substance?
We cannot see that.
We cannot see it, right? For example, I am teaching you through the laptop and this stylus pen. So, can I see my laptop? Can I touch my laptop? Of course,
Yes,
yes. Yes,
yes.
I can see, I can touch my laptop. It is a physical asset. It is having a physical substance. But can I see the software, the program inside this laptop which enables this laptop to run as a laptop?
No, sir.
No, I can't see. I can't see, right? I don't know what is the program inside. I don't know how it is working. I don't know when I'm touching my pen to the screen, it started writing. Okay. So the program I can't see, the software I can't see, the entire logic behind this laptop, I don't know. Right? I don't see. I can't touch. So this is the difference between a physical substance and without physical substance. So the basic difference between a tangible asset and intangible asset is without physical substance. I mean to say, this intangible assets does not have a physical substance while tangible asset has a physical substance. For example, property, plant and equipment has a physical substance. Investment property has a physical substance. Biological asset has a physical substance, but intangible asset does not have a physical substance. No physical existence like PP, investment property, we cannot touch, see, and hold. Now, the question is, computer oblique laptop in which operating software are there. Computer oblique laptop in which operating software are there, right? So in that case, whether it will be a tangible asset or it will be an intangible asset, what it will be there?
Laptop will be a tangible asset, sir,
Laptop will be a
and
tangible,
software will be considered as intangible.
tangible asset. Yeah. Friends, just allow me 30 seconds, okay? Yes. So laptop is a tangible asset. Okay. Software is an intangible asset. But the point is, you purchase a laptop in which operating software are there. So my question is whether entire computer and laptop will be classified as a PP or intangible asset, or it should be splitted between PP and intangible asset. See, you need to look at if the software is integral part of the hardware, then it will not be capitalized separately, right? So in that case, computer or laptop will be capitalized as a PPE. For example, if you will not install, so basically you have not purchased it separately. When I purchased this laptop, the Microsoft Office, MS Office was inbuilt in this laptop. Tell me, in your company where you have audited, where you have gone for audit, you must see computer laptop on your fixed asset register. Have you seen or not?
Yes, sir.
You must have seen, right, Sachi? You must have seen computer laptop capitalized in the books of
Yes,
the
sir.
companies. Yes. But have you seen if these computer and laptop generally comes with the Microsoft Office MS Window? Have you seen the separate capitalization of MS Window?
No, sir.
No. Why no? Because it is integral part of the hardware. The machine cannot run without this window. But tell me, have you seen the Tally software which is capitalized separately, or some text software or some other operating software? You must have seen the company has purchased
Yes,
some other software, they have capitalized separately, right? And
yes, sir.
those software are not on every machine. Those software are not on every laptop, every computer, on limited laptop and computer. Correct? So in that case, those softwares are capitalized separately. Why? It is not integral part of the hardware. If the Tally software will not be installed in your laptop, can't your laptop run without the Tally software? Answer is yes. You can maintain your data on Excel. You can make a PowerPoint presentation. You can write a report on the Word file. Okay. But if you don't have window, can you run your laptop?
No, sir.
Answer is no. Answer is no. So that is why the companies are capitalizing this entire hardware. I mean to say laptop as a property, plant and equipment. They are not splitting the software separately. Okay. Now, second example, robot. Have you seen the robot in movies, YouTube, internet? Have you seen the robot? Yes. So my question is whether robot is a PP or intangible asset. Robot is
It
a
will be
PP.
PPE
Robot is a PP. Why?
because we can see it and it works like
Okay.
physical damage के लिए भी उसका है.
So
It has.
let me ask a separate question, Sachi. In that case, you went to the market for purchasing a software. Okay, and the shopkeeper given you that software in a pen drive or CD, pen drive or CD, and you paid 10,000 rupees to that shopkeeper. So he has handed over the pen drive to you or CD to you, compact disc. You can see, you can touch, you can hold. Is it a PP or is it an intangible asset?
Intangible asset, sir.
Why? But you can see, you can touch, you can hold. He has given you
The
that.
actually main property is that software installed in that, and it is only used for that purpose for that particular
Yes,
software.
you absolutely bang on. You have given the right answer. And exactly what you have told me, I am going to tell you. Tell me in the robot. In the robot, what is important, that skeleton or the program? Have you used Alexa? Alexa?
Yes, sir.
When you ask Alexa, good morning, Alexa will tell you good morning. When you ask Alexa, how's weather today? Alexa will tell you the weather is sunny today, it's windy today, it's 10 degrees Celsius as of now, right? When you ask some different question to Alexa, Alexa will tell you, sorry, I don't know this answer. Okay. So the point is, if you buy Alexa, what is important in the Alexa? Knowledge embodied in it, that is more critical, that is more important, or that skeleton of Alexa? What is more valuable?
Uh, that knowledge.
Of course, that knowledge. If that program, that knowledge should not have been inbuilt, that Alexa also is of no use. So what is a robot? The robot is like a storage device. like floppy disk, like compact disk, like pen drive, this robot is also like a storage device where the program was inbuilt in that robot to act like a robot, right? So robot is capitalized as an intangible asset. So you need to look at the significance. You need to look at the significance of that item. Okay. So like you said, na, कि that program is important, that software is important, that whatever is stored in the pen drive is important, not pen drive is important. Okay. For example,
Yes, sir.
third question. Telecom company got a license from Government of India by way of a contract. Is it a PP or intangible asset?
Intangible assets, sir.
But they will get a license in the form of a document, in the form of a contract, in the form of a piece of a paper. And they paid 50,000 crore to acquire a spectrum license. They paid 50,000 crore to acquire a spectrum license.
Then also it's a software, sir. Na license is a software so that they can
License
provide their services.
License is a software. The piece of paper does not have a value. The value is that contract, the rights given by the government to the company by way of telecom license, right? So we understood
Yes.
the meaning of without physical substance. We understood we need to look at the significance. We need to look at what is integral in that, right? We understood it. So what is the definition of intangible asset? Intangible asset is an identifiable non-monetary asset without physical substance. Without physical substance, we have covered, my dear friends. Now, let's go into the reverse order and discuss non-monetary asset. What is meant by non-monetary asset? Any student who want to attempt, what is meant by non-monetary asset?
So
Anyone?
non-monetary asset
In
means which
Yes.
cannot be readily convertible into cash in a short period of time.
You are absolutely right. So not in a short period of time. So basically, it is more like non-monetary asset are, by the way, definition of non-monetary assets are very simple. Non-monetary assets are those assets which are not monetary assets, right? But what is monetary asset? So monetary asset are those assets which can be converted into fixed unit of cash, which can be converted into fixed unit of currency. Okay, which is realizable in the fixed unit of currency. Means monetary asset means those assets which provides a right to receive a cash into a fixed unit of currency. Right to receive cash into a fixed unit of currency. Let's understand this with the help of an example. Tell me inventory, whether inventory is a non-monetary asset or monetary asset. What is inventory? Non-monetary or monetary?
Non-monetary, sir.
non-monetary, sir.
All of you are saying non-monetary. Why? But you will get you will get the money by selling the inventory.
Yes, sir. Fixed unit of cash is unknown now.
Yes, you're absolutely right. So when it is a inventory, you don't have any right to receive fixed unit of money. So if inventory is in the godown and tomorrow, if there will be a fire in the godown, can the company say, I have to receive so much amount from Mr. X? Can the company say?
No.
Of course, no, because there is no right to receive cash by selling the inventory. There is no right to receive cash. Okay. But once inventory has been sold on credit, so this asset will be replaced by which asset?
Receivable.
Receivable, trade receivable, sundry debtors, trade receivable. So when this inventory will be sold on credit, it will be converted into trade receivable. Whether the trade receivable is a monetary asset?
Yes, sir.
Answer is yes. Trade receivable is a monetary asset. Why? Because then you will see, then you will say, I have to receive 5,000 rupees from Mr. Ram because I have sold goods worth 5,000 rupees to him. I have raised an invoice of 5,000 to Mr. Ram. Is that clear? Have you understood the meaning of the right to receive cash into a fixed unit of currency. Right. Inventory, you can say, if I will sell inventory, I will be able to fetch 10,000 rupees. But from whom? You haven't sell inventory. And if this inventory is destroyed, if it is a perishable inventory and the inventory is destroyed, you don't have any right to recover money from anyone. Right? And even though if you have a right to recover money from anyone, but it is not into a fixed unit of currency, means you are not aware whether I will receive 10,000 rupees or 10 rupee. I don't know. Right? Have you understood? So what is meant by fixed unit of currency? Fixed unit of currency means amount should have been fixed, and from whom the amount has to be received. It has to be certain. Okay? Right? If I will say I have to receive 10,000 rupees, but with whom? From whom? I don't know. So it is not a monetary asset. But if I will say I have to receive 10,000 rupees from Mr. Saminathan, then whether it will become a monetary asset? Yes? Sachi, it will be a monetary asset?
Ye-
Or Lavanya?
Yes, sir.
Yes.
Yes, sir.
Then it will become a monetary asset, because now I'm saying, and when I'm saying I have a right to receive fixed amount from a particular person, from a party. Okay. So what is the example of monetary asset? Asset which gives a right to receive cash into a fixed unit of currency, like trade receivable, loans, cash, bank balance. These are the monetary asset. Non-monetary asset. Non-monetary asset are those assets which are not a monetary asset. For example, PP, investment property, biological asset, inventories. These are the non-monetary asset. Now let's come to the first part. The definition of intangible asset was, intangible asset is an identifiable non-monetary asset without physical substance. What is meant by identifiable? What is meant by identifiable? Friends, an asset will be considered as identifiable when either it is separable or it is arising from contractual or legal rights. Whether it is separable or it is arising from contractual or legal rights. What is the meaning of arising from contractual or legal rights? The government has given a license to Bharti Airtel to operate 5G telecom services into 22 states of India. Into 22 states of India. So in this case, how Bharti Airtel has got the right to operate in 22 states of India? By way of contract,
Contract.
by way of contractual rights, by way of legal rights. If tomorrow other telecom companies started operating in that jurisdiction without having that license, can Bharti Airtel sue them? Can government of India stop them from operating? Of course, yes, because they don't have the legal or contractual right to operate. But Bharti Airtel has a contractual or legal right to operate. Okay. So if an intangible asset is coming from a contractual or legal right, it will be considered as identifiable. That is number one. Number two, intangible asset will be considered as identifiable when it is separable. There are two different conditions, right? It is not and, it is or. It is or. Either it is separable or it is arising from contractual or legal rights. Okay. Friends, what is meant by separable? Separable means it is capable of being sold, rented, licensed, exchanged separately from the entire business or entity. What does this mean? Let me tell you. A company has a legacy. A company has a legacy. A company has a legacy of, let's say, a company has a legacy of 50 years, right? By having a legacy of 50 year, the company has captured a market share of 80%. Means 80% of the customer came to this company to purchase a product. 80%. Now tell me, this company wants to sell the market share. Market share means a new entrant has come, a new company has come dealing in the same line of business. So this company wants to sell the market share with the competitor, the new entrant into the market, the new company into the market. Can this company sell the market share independently?
No, sir.
बेच सकता हूं? Answer is no, because that entity is not controlling the market share. Okay. So that entity cannot compel Lavanya, Sachi, Rahul, Saminathan that listen, you have to buy the product from this company or from this shop. Can a company have a control over the customer? Yeah.
No, sir.
So far I was using Dell laptop. Now I purchase a new laptop of Lenovo. So whether Dell, I was using Dell for let's say 5 years, but whether Dell has a control over me? Answer is no. One fine day, I went to the shop and bought Lenovo laptop, right? So the point is the company is not controlling the customers and the company is not controlling the market share independently. Means the market share cannot be sold, right? Cannot be sold separately from the entity, right? But if this entity wants to be sold out, let's say the promoter or the owner of the company wants to sell this company. Tell me, whomsoever will purchase this company, whether he will pay a premium or not. Whomsoever.
Yes, sir.
Why? Why the buyer will pay a premium? Why?
Because they acquired even the goodwill of this company.
They
That is the
acquire the
market.
goodwill of this company because when they acquire this company, they are automatically getting a established market share of 80%. Right? 80 could be 75, 80 could be 82, 85 also, but they are getting a huge market share. Indigo Airlines today, Indigo Airlines, how much market share Indigo captures? Do you know? Do you know it is the largest airline of India? Yes, it captures
Yes.
market share of 65%. It captures market share of 65%. Right. So if anyone who buy Indigo, he will get the market share automatically, na? If they will buy the aircraft, they will buy the resources, they will buy the offices, they will automatically get the customer of 65% of India, right? So
Yes, sir.
what is meant by separable? Separable means आप एंटिटी उस एसेट को क्या गुडविल को एंटिटी अपने आप से अलग करके बेच सकती है? आंसर इज नो. क्या रेंट पे चढ़ा सकती है? आंसर इज नो. क्या लाइसेंस कर सकती है? आंसर इज नो. क्या एक्सचेंज कर सकती है? आंसर इज नो. सो मीन्स इट कैन नॉट बी सोल्ड सेपरेटली फ्रॉम द एंटिटी और द बिजनेस. इट कैन नॉट बी सोल्ड सेपरेटली. ओके, क्लियर? Is that clear? So market share will not be recognized as an intangible asset because it is neither arises from contractual or legal right, nor it is separable from the entity as a whole. It is just like a person is saying, I have done a lot of charity in my life. I donated so much amount in my life that I have a huge bank balance of religion, धर्म. मैंने बहुत धर्म कमाया है, मैंने बहुत पुण्य कमाया. Can I sell that धर्म और पुण्य separately from me?
No, sir.
No. Have you understood this example or not understood this example? Have you understood
Yes,
or
sir.
not understood?
Understood.
You understood,
Understood.
no? Understood. Your intelligence. Can you sell your intelligence in addition to you as a person? Can you sell your intelligence? That
No, sir.
you pick your intelligence from here. So you understood FR, everything in FR you understood. So you'll just pick that FR from your brain and sell to somebody else. Can you do that? And
No, sir.
it is not separable from you as a soul. It is not separable from you as a human, from your body. So what is your soul? What is your body? What is a human? It is an entity. It is an entity, right? Can we sell intelligence? Can we sell dharma, punya, अच्छे काम, कर्म from this entity? No. It cannot be sold separately. It cannot be sold separately. Right? Is that clear? Reliance Communication have purchased a telecom license from Government of India. It is recognized as an intangible asset. You might be thinking that what sir is talking about today, he is talking about karm, dharma, right? Is it a FR class or is it a religion class? A spiritual class. Okay. Yes. So coming back to this, now let me ask you another question. Government of India has Government of India has given a license to an entity, telecom license, let's say. Okay. And Government of India told you cannot transfer this license to anyone else. Okay. Means we have given you this license and this license is only for your use, your consumption. You can't sell this license to anyone else. Means this license cannot be sold. This license cannot be rented. This license cannot be exchanged. Nothing. If this company will be sold out, of course, this license will be transferred to the acquirer. But without selling the entity, this license cannot be sold, rented, exchanged, etc., etc. My question to you guys are whether this license is considered as identifiable, whether this license is an intangible asset. Tell me.
Yes, sir. Intangible asset.
Why? It is not separable. It is not separable. Then why it is an intangible asset?
It arose from a contract, sir, and moreover, his intentions are not taken into consideration.
So it is arising from contractual or legal right. It is not and, it is or. Either it should be separable or it is arising from contractual or legal right. The goodwill. Whether goodwill was arising from contractual or legal right, answer is no. Right? Answer is no. Market share. Is it arising from contractual or legal right? Answer is no. Nobody has sell you market share. Nobody has sell you goodwill. Okay. So that is why it is not required to be capitalized separately. Purchased goodwill. An entity acquire another entity. In that case, whether goodwill will be capitalized?
Yes, sir.
Yes. Why? In this case, it will become a purchased goodwill. Purchased goodwill means you have paid a consideration for that. Okay. So you have paid a consideration for that. For example, when have you heard about Reliance Communication, Anil Dhirubhai Ambani company? कर लो दुनिया मुट्ठी में. Have you heard about that
Yes,
punchline? Yeah.
sir.
So that was a Anil Dhirubhai Ambani company. And have you heard about Reliance Jio? Mukesh Ambani company. Reliance Jio. Right now it is operative.
Yes,
Reliance
sir.
Jio. Yes. Reliance Communication is no more. It become bankrupt, insolvent, but Reliance Jio is doing pretty well. They are earning thousands of crores every year. Okay. So, when Reliance Communication, when the division happened between the brothers, Anil Ambani and Mukesh Ambani. So when Dhirubhai Ambani was there, the entire Reliance empire belongs to these two brothers and of course Mr. Dhirubhai Ambani. But after his death, Mr. Dhirubhai Ambani's death, what happened? These two brothers separated. Means they divided the business like energy business, like energy, telecom, ports, infra, these goes to Anil Ambani. And oil and gas, okay, retail, this went to Mukesh Ambani. So when this division happened, so they had a non-competitive agreement. What is meant by non-competitive agreement? Means there was an agreement that in the next 5 year or 10 year, let's say, for next 10 years, you will not enter into a telecom business. For example, Anil Ambani was running a telecom business. He told Mukesh Ambani that he will not enter into a telecom business. So that is why Mukesh Ambani has not entered into telecom business for a longer period of time. But in 2016, he entered into a telecom business when this non-competitive clause finished off, right? So again, the point is, and I'm talking about why purchased goodwill is capitalized. Why? Because when a acquirer acquires a company, so at times there are non-competitive agreements also where the seller says that I'm not entering into this market. Okay. So since you are acquiring me, my company, so automatically the customer reputation, all everything belongs to you. You are going to a restaurant for eating, and I'm sure you guys have went to so many restaurant for having your food. Do you know the owner of the restaurant? That who is the owner of the restaurant if it is running on a franchisee model? You must had a food at Sagar Ratna. You must had a food in Bikaner Wala, Haldiram, right? You had a food in so many outlet or restaurant. But the point is, do you know the owner of that restaurant? Every time. Sachi
No,
or
sir.
Lavanya? No,
No, sir.
you don't know. You only know the place. You only know the restaurant. You only know the menu, right? If the food will not good, you will stop going there. So let's say you went to a restaurant today for having samar bada, for having idli, vada, samar, dosa, because you like the taste in Sagar Ratna. So today, this Sagar Ratna outlet belongs to me. Tomorrow, I sell that outlet to Lavanya. Now Lavanya become the owner, right? Again, Sachi again wants to have a dosa, idli, samar bada. She again went to that Sagar Ratna restaurant. She had a food. So she is least bothered that whether Alok is the owner or Lavanya is the owner. The point is what I'm making here, that when I sold my outlet to Lavanya, so I sold my outlet, my space, my furniture, my resources, my safe, my kitchen instrument, my cutlery, my menu, everything I have sold her. I have sold this entity to her. So automatically, Sachi was coming when it was my outlet. She is also going when it is Lavanya's outlet. Are you getting me? So in that case, what happened? In that case, automatically market share, goodwill, automatically it will move to the acquirer because acquirer has paid a consideration for that. Now, since it went to Lavanya, so the point is now she has changed all the chef, all the all she has changed all the cook, all the chef. Now they are not giving a good taste. Now Sachi is not liking that food because the taste is not good. So she stopped going there. Likewise, the customer downfall started. The customer downfall started. So why Lavanya paid goodwill? Why Lavanya paid extra premium in buying my outlet? Because my outlet was full of customer. But when this customer started getting down, she purchased a goodwill, she capitalized a goodwill. What will happen with that goodwill? क्या होगा goodwill का?
Impairment.
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 Yes, very good. Impairment. So in that case, it will started triggering impairment. Okay. So I believe now you guys have understood separable, identifiable arising from contractual legal right. Now you guys have understood internally generated intangible asset cannot be capitalized, right? But purchased intangible asset will always be capitalized, right? Like market share, internally generated goodwill cannot be capitalized, but purchased goodwill can be capitalized. Friends, have you understood this in detail? Identifiable non-monetary asset without having a physical substance. Have you understood it?
Yes, sir.
Very good. Doesn't matter if you have attended the full class or not. If you have attended this last 30-minute class, You have understood the concept, right? I have covered all the examples, everything. And even this dharma, karma, body, soul, human entity, this example even I have not covered in my full class. Right, Saminathan? Yes. Recognition criteria now. When an intangible item is going to be recognized as an intangible asset. Okay. When an intangible item will be recognized as an intangible asset. When future economic benefits would be probable and cost can be measured reliably. Always remember these two condition, condition number 1 and condition number 2 will always be there, in all the recognition of asset. Third, it gives the third condition which says that it should meet the definition of intangible asset. Why it is important? If you look at the PPE recognition criteria, the PPE recognition criteria also says that future economic benefits should be probable and cost can be measured reliably. If the third criteria would not have been there, don't you think there is a dispute between the PP and the intangible asset recognition criteria?
Yes, sir.
So that is why because in PP condition number 1 and 2 is cut copy paste, right? So that is why they have given the third condition and they said future economic benefits should be probable, cost can be measured reliably, and it should meet the definition of intangible asset. Now tell me what differentiates a PP and intangible asset. PP is also a non-monetary asset. PP is also identifiable. What differentiates PP and intangible?
Existence, sir. Physical substance.
Existence. Yes, you are absolutely right. Intangible assets are without physical substance. PPE are physical substance. Okay. Physical existence. Very good. Now the next part, initial measurement. The point is initial measurement. At what value the intangible asset has to be measured at the time of recognition? It has to be measured at cost. It has to be measured at cost. But the measurement of intangible asset at the time of initial recognition depends on the mode of acquisition also. Right? Mode of acquisition. What could be the mode of acquisition? Separate acquisition. For example, mode of acquisition could be separate acquisition, right? If I talk about mode of acquisition, it could be separate acquisition. What is meant by separate acquisition? You went to the market, purchase a tally software, buy a software. You are a company, you got the SAP software, SAP from the SAP company. You got the ERP from Oracle. Okay. You're absolutely right, Saminathan. Like you bought the license from the government. Okay. So whenever it is a separate acquisition, it has to be measured at cost. And what is cost? Cost includes label, purchase, taxes, minus discount and rebate plus directly attributable cost. What is meant by directly attributable cost?
So the costs which are incurred because we purchased the asset.
Very good. The cost which are incurred because we purchased the asset means this cost would have been avoided if we would have not purchased the asset, right? If we would not have been purchased the asset, this cost would have been avoided, right? So this is known as a directly attributable cost. Okay. So purchase price plus non-refundable taxes minus discount and rebate plus directly attributable cost. Friends, for example, today I went to a market and purchased a tally software. The shopkeeper, I asked shopkeeper, what is the price of the software? He told me 1 lakh rupee. He told me 1 lakh rupee. I told him, I will pay you after 1 year. He told me, sorry, the price is 1,10,000 rupees. Tell me at what value I should capitalize my software. I am paying after 1 year. I have purchased the software on deferred payment terms.
So 1,10,000.
1,10,000. Okay.
Because we'll have to make 1 lakh only, 1 lakh.
But you have to
Because
pay
we are
10,000. But you have
expense
to.
of
So Saminathan is saying, sir, 1 lakh has a software cost, intangible asset, and 10,000 is a finance cost. You are absolutely right. So what happened in case of deferred payment terms? When you are purchasing on a credit, if it is on a deferred payment terms, in that case, you have to capitalize your intangible asset always on the normal case price, on the cash price equivalent. Means if I would have paid, on the normal terms, then what would have been the price? So the price is 1 lakh. So now you are purchasing the software today. So you will capitalize the software today. What entry you will pass? Intangible asset account debit to payable or sundry creditors, to sundry creditors. So 1 lakh asset, 1 lakh liability. Now what you will do after 1 year? You will debit interest expense debit to sundry creditors. So 1 lakh went to asset, 10,000 went to interest expense in the P&L, and the balance in the sundry creditors stood at 1,10,000. Now last entry, sundry creditors account debit to bank 1,10,000. Right? So in case of deferred payment terms, you have to capitalize your intangible asset. You have to measure your intangible asset on the cash price equivalent. Is that clear? And the difference between cash price equivalent and the total price paid will be considered as an interest expense. Is that clear or clear?
Clear, sir.
In mind or from mind?
In mind, sir.
In mind. Very good. So clear in mind. Very. Yes. Now coming back to my dear friends, coming back to again. So we covered separate acquisition. Now the point is, now we need to cover exchange of assets. Friends, exchange of assets. You purchase a license from Government of India and you sell your software. So you bought one intangible asset and you sold another intangible asset. Right? Exchange, barter. You understand exchange, you understand barter. So the point is, when we are purchasing an asset and paying a consideration in terms of cash, we are recognizing the amount that whatever cash we have paid at the time of acquisition. Okay. But the point is, when we are purchasing a software or a license or an intangible asset, when we are buying an intangible asset, okay, and we are not paying in terms of cash, we are paying in terms of an asset. We are paying in terms of an asset. We are paying in terms of an asset. So the point is, at what value I should capitalize, I should measure my intangible asset acquired.
Sir, fair value of asset given up.
Fair value of asset given up.
Given.
And while your answer is right, but tell me why you have chosen fair value of asset given up. Why?
Sir, when paying cash, we are recording fair value of
Of
cash,
the
which
cash.
is cash.
Yes. You are absolutely right. I'm really impressed with your answer. The way you said, na, fair value of cash. So fair value of the cash is the same value, right? But you haven't said that we are recording at the cash amount. You are saying when we are paying in terms of cash, we are paying a consideration in terms of cash, we are recording at the fair value of the cash given. So when we are giving an asset, so when I am giving my consideration, paying my consideration in terms of asset, then I will recognize the asset acquired at a fair value of the asset given, because my consideration is the asset which I'm giving. So I will record at fair value of the asset given. When I was paying cash, I was recording at fair value of cash given, right? You are absolutely right. So first priority is, and Saminathan has written on the chat box, Saminathan says, sir, first choice is fair value of asset given up. Very good, which is also Lavanya said. But if the fair value of asset given up is not identifiable, then or not
Fair
measurable,
value of asset taken.
fair value of asset taken, then you can see fair value of asset taken. For example, neither fair value of asset given up nor fair value of asset taken, both are non-identifiable. Then
Book value of asset given up.
yes, so basically whatever asset we have given, that must be in the books of accounts ना. Doesn't matter अगर 1 रुपया पे है तो 1 rupee is the value, but कुछ तो value होगी. So whatever is the WDV, whatever is the book value, that will become the value of the asset acquired, right? So first choice, fair value of asset given up. Second choice, fair value of asset acquired. Third choice, WDV of the asset given up. Very good. And I'm really impressed with the answer. Okay. Yes. So let's discuss a question on the exchange of assets. Shall we discuss the question on exchange of asset? One complex question should we discuss?
Yes, sir.
Okay. So let me share my screen. Please confirm if you are able to see this Word file. Are you able to see this Word file?
Yes, sir.
Yes. Sun Limited acquired a software. So Sun Limited, what this Sun Limited has done? What this Sun Limited has done? This Sun Limited has acquired a software from Earth Limited. From Earth Limited. Two companies are there, Sun Limited and Earth Limited. And what Sun Limited is acquiring? Software. In exchange for a telecom license. So Sun Limited is acquiring a software, intangible asset, and what Sun Limited is giving? License. Sun Limited is surrendering, giving license. The telecom license is carried at 5 lakh rupee in the books of Sun Limited. The telecom license is carried at 5 lakh rupee in the books of Sun Limited. The software is carried at 10,000 rupees in the books of Earth Limited, which is not the fair value. Okay. So in this question, Sun Limited, Earth Limited, right? There are two entities, Sun Limited and Earth Limited. Okay. Sun Limited acquire from Earth Limited. Sun Limited acquire software given license. So both are intangible asset. Okay. The license was, the WDV of the license was 5 lakh in the books of Sun Limited. The WDV of the software in the books of Earth Limited is 10,000 rupees. Past journal entries in the following situation in the books of Sun Limited and Earth Limited both. So this question is asking to provide the entry both in the books of Sun Limited as well as in the books of Earth Limited. Number one. Okay. So whenever these kind of question will come, where question will test your knowledge and question will test your knowledge from both the side. So you have to solve your answer step by step. Step by step means forget about Earth Limited. Just think about Sun Limited. That you have to do the accounting in the books of Sun Limited. Okay. So we will only talk about Sun Limited right now. Forget about Earth Limited. Tell me what Sun Limited has acquired.
Software.
Software.
What Sun Limited has given.
License. Telecom.
License.
What is the WDV of the license in the books of Sun Limited?
5 lakh.
5 lakh.
5 lakh.
5 lakh rupees. These are the three facts. Will you be able to remember?
Yes, sir.
Sun
Yes, sir.
Limited acquired software. Sun Limited given telecom license. WDV of the license is 5 lakh rupees. Simple. Now let's quickly solve this question. Point number one, from the perspective of Sun Limited, forget about Earth Limited. Fair value of software is 5,20,000, means fair value of asset acquired is 520 and fair value of license asset given is 5 lakh. Tell me what is the accounting entry in the books of Sun Limited in this case?
When the both fair value is given, we have to consider that asset license is given up.
Fair value of asset given up. So what is the entry? Entry is first of all, which asset is coming up? Software account debit. To what? To telecom license. To telecom
Decommission
license.
of earlier asset.
To telecom license. So software intangible asset account debit to telecom license intangible asset. Now value, what is the value?
5 lakh.
5 lakh. So 5 lakh was the WDV and 5 lakh was the fair value also. Will you see any profit or loss in this transaction?
No.
No, right? Are you agree with this accounting entry, everyone? Software account debit to telecom license account. Are you agree with this accounting entry?
Yes. Yes, sir.
Yes. Okay. Now second part. Fair value of the software is not measurable. So fair value of asset acquired is not measurable. Okay. Asset acquired is not measurable. Okay. Fair value of telecom license transferred. So, however, similar telecom license is transacted by another company at 490. What does it mean? Means fair value of license is there. So, fair value of asset given up is there. Asset acquired is not there. What is the accounting entry?
Software account 490.
Software account debit. Always software will be always debited. Software account debit to telecom license. At what value?
WDV.
See, telecom license will be credited WDV. In the first question, the telecom license WDV and the fair value was same. So you debit your software at 4,90,000. You credit your telecom license at WDV, which is 5 lakh. Okay. So debit software by 490, credit telecom license by 5 lakh. In this transaction, you have a loss of what? 10,000. Loss on exchange, debit 10,000 rupees. So Lavanya, Sachi, have you understood this entry or
Yes,
not?
sir. Yes,
Yes.
sir.
Very well.
Understood.
Very well. Okay. Third, neither fair value of software nor telecom license could be reliably measured. Then
Book value of
book
license, sir.
value of
5 lakh.
license given up. So software account debit to telecom license. Simple. Software account debit to telecom license. Okay. So now solve this question from the perspective of Earth Limited. Now you have to do the accounting in Earth Limited. Tell me, what Earth Limited acquired? License.
License.
What Earth Limited given?
Software.
Software.
Software. What is the WDV of the license in the books of Earth Limited?
10,000.
10,000. Very good. Now, what is the accounting entry in the first case? Fair value of software is 520, license is 5 lakh. So, fair value of asset given up is 5 lakh. Asset, fair value of asset given up is 520, asset acquired is 5 lakh. Earth acquired license. Earth acquired license. So, what is the accounting entry? Telecom license intangible asset account debit, first of all. First of all, without number, pass the accounting entry. Telecom license is acquired by Earth Limited, and you can just write down on your paper, right? Telecom license account debit to software account. Tell me at what value I should credit my software. Of course, always at WDV 10,000. But at what value I will debit my telecom license? At the fair value of the software given.
5 lakh 20.
5,20,000. So telecom license 5,20,000 rupees debit. Software credit 10,000 rupees. To profit on exchange 5,10,000 rupees. To profit on exchange 5,20,000 rupees. Is that clear? Same way. Same way. In the second part, fair value of software is not measurable, means fair value of asset given up is not measurable. But fair value of asset acquired telecom license is 490. So if fair value of asset given up is not there, what is the second choice? Fair value of asset acquired will become the
Acquired.
fair value. Will become the cost. So telecom license account debit 490. Software credit, of course, always at WDV 10,000. To profit on exchange 4,80,000. Right. Friends, what is the third entry? No, neither fair value of software nor telecom license, nothing is given. Then
Book
WDV,
value of
WDV of
WDV
what in Earth Limited? WDV
license
of software.
10,000.
soft.
License is required, software is given by Earth Limited. So might be you are struggling because you are talking. But when you write on a piece of paper, na, these information, it will be easy for you. And before putting a number, put the debit credit. Telecom license account debit to software. And always put 10,000 rupees credit to software because the credit is always a WDV. But the difference between the WDV which you have credited like 10,000 for software in all this scenario, right? And the value at which you are debiting, capitalizing, the difference will go to P&L, right? So in this case, since no any fair value is given, so telecom license has to be recorded at the WDV of asset given up. So telecom license account debit to software account. Is that clear now?
Yes, sir.
Very much or not?
Clear, sir.
Okay, very good. So we discussed this question also. Internally generated goodwill. Whether this internally generated goodwill will be capitalized? Never.
No, sir.
No. Internally generated goodwill will never be capitalized. It will never be capitalized. Okay. Will never be capitalized. Okay. Friends, so can I take a break right now instead of 8:30? Yeah. Yes.
Yes,
After
sir.
that, we will
Yes.
continue with the session. So friends, it's 8:03 now. Let's start at 8:15. Okay. 12 minutes break. Ashok ji, break start now. Okay. I will start at 8:15. Yes. So we discussed mode of acquisition in case of separate acquisition, exchange of asset, internally generated goodwill. Now let's discuss business combination. So intangible asset acquired through business combination has to be measured at fair value, right? Has to be measured at fair value. Okay. So here we discussed cost. Here it is at fair value. Here no recognition, internally generated goodwill. In exchange of assets, there is a choice. Choice first fair value, then WDV. Okay. So fair value of asset given up, fair value of asset acquired, then WDV. Whenever the intangible assets are acquired through business combination, it has to be measured at fair value. Okay. Let's discuss one question on the business combination. Yes. Question number 5. X Limited is engaged. I hope my Word file is visible to everyone.
Yes, sir.
Okay. Yeah. So X Limited is engaged in the business of publishing journals. They acquired 100% stake in Y Limited. They acquired 100% stake in Y Limited. A company in the same industry, X Limited paid purchase consideration of rupees 10 crore, 100 lakh. So what is the purchase consideration paid? 10 crore. Okay. And fair value of net assets acquired is 8.5 crore. 10 crore is the purchase consideration. 8.5 crore is the value of net assets, fair value of net assets. The purchase consideration includes payment for the following as well. 30 lakh for obtaining the skilled staff of Y Limited. So here in this question, what is my purchase consideration? 10 crore is my purchase consideration. What is my value of the net assets? Means fair value of net assets, you understand? Total assets acquired minus liabilities. Like this company has acquired building, offices, furniture, fixture, etc., and other assets also. So total net assets is 8.5 crore. So how much this company is paying extra?
1.5 crore.
1.5 crore. And why this company is paying extra? Because of the brand, some other inherent intangible assets. Okay. So this company is paying 30 lakh for obtaining the skilled staff of Y Limited. So this company knows that the staff is very good. The staff is honest, reliable, diligent, loyal, and the staff is skilled staff. Okay. So this company is thinking if I'll acquire Y, automatically I'll get the staff of Y also. Right? Like in that Sagar Ratna restaurant, automatically when Lavanya acquired Sagar Ratna restaurant, she automatically got the cook also. Cook, safe, right? So
Yes, sir.
30 lakh for obtaining the skilled staff of Y Limited, 50 lakh by way of payment towards non-compete fee, so as to restrict Y Limited to compete in the same line of business for 5 years. Okay. So there is a non-compete fee agreement also, 50 lakh rupee. However, the above item A and B are not forming part of net assets acquired of 8.5 crore. So this 30 lakh and 50 lakh is not included in this 8.5. What they are saying, it is not included in 8.5, right? So it is an addition to 8.5, 30 lakh and 50 lakh. So means the company is paying 1.5 CR extra, and when the company got the valuation done, so they found that we need to pay almost 30 lakh for skilled staff. Because when I will groom my staff, for example, a new staff or my staff, it will take time also and it will take investment also. I have to give them training, etc., etc. And if I will stop him to continue the business in this market, it will also gives a benefit to me because more customer will come to me. Simple. So the valuation of the non-compete fee for the next 5 years could be 50 lakh rupees. Right. So 30 plus 50. Now my question is whether these items, skilled staff, non-compete fee, whether these can be recognized, these can be measured as an intangible asset. That is my question to all of you. How to solve this question? Please tell me. Please help me out. I don't know how to solve this question. Please help me out. कैसे करें इस क्वेश्चन को सॉल्व? Tell me. How to solve this question? First of all, purchase consideration. First of all, purchase consideration is there. Purchase consideration. What is my purchase consideration? 10 crore. 10 crore is my purchase consideration. Less net assets acquired. Net assets acquired. How much is my net assets acquired?
8.5 crore.
8.5 crore.
8.5 crores. Okay. 8.5 crore. Less. What should I do? I'm paying 30,000 for skilled staff and 30 lakh for skilled staff, and I'm paying 50 lakh for non-compete fee. Should I capitalize both these intangibles?
Skilled labor we will not capitalize. The reason is that after purchasing the skilled labor, we do not have the control over it. They can anytime they can move out, so that cannot be capitalized. That has to be expensed.
And what about non-compete fee?
Non-compete fee we can capitalize as the intangible asset because 5 years the another company
Contract.
will. It's a contract.
Yes.
Contract.
It is arising from contractual right. I am stopping them. So
Correct.
if it will again enter into the market, I can file a litigation against him. Why? Because there is a contract signed between me and him. I mean to say this company X and Y, there is a contract which is signed, and contract says that you should not come to this market for next 5 years. And that guy also said, okay, give me 50 lakh rupee. I'll not come to this market for next 5 years. Right?
Yes, sir.
You are
Exactly.
absolutely right. You are absolutely right. Skilled staff, right? It has not to be capitalized separately. But what about non-compete fee? Non-compete fee 0.5 crore. 50 lakh has to be capitalized separately. So 10 minus 9. 10 minus 9. Okay. 9 crore. The differential is 1 crore. What is this 1 crore?
Goodwill.
Goodwill.
This will be capitalized as a goodwill. This will be capitalized as a goodwill. Okay. This will be capitalized as a goodwill. I hope you have understood this part. So X Limited should recognize an intangible asset in respect of the consideration paid towards non-compete fee. However, amount paid for obtaining skilled staff amounting to 30 lakh does not meet the definition of intangible asset since X Limited has not established any right over the resource and the same should be expensed. The entity has insufficient control over the expected future economic benefit arising from the team of skilled staff. Therefore, 50 lakh will be separately recognized as an intangible asset, whereas amount paid for obtaining skilled staff does not meet the recognition criteria for being identified as a separately intangible asset. However, since it is acquired as part of business combination, it forms part of the goodwill recognized at the acquisition date. Okay. So the value of goodwill will be 1 crore. So friends, we covered exchange of asset example from this word file, and we have also covered what? Business combination as a part of business combination example also from this word file. Now let's move to the next part. Okay, what was the next part? The next part is government grant and internally generated intangible asset. Government grant and internally generated intangible asset. So now let me take you to the Excel file again. We were discussing mode of acquisition and we have already covered separate acquisition, deferred terms, exchange of assets, right? We have covered this. Now talking about the government grant. Right. What is meant by government grant? When government is giving some intangible asset, free of cost or at a concessional rate, right? Either free of cost or at a concessional price. Now there are two options for recognizing and measuring intangible asset, which is taken as a government grant. Option number one, recognize both government grant and intangible asset at fair value. Okay. For example, the government has provided free mining right to the company for 5 years. Free mining right to the company for 5 years. The fair value of such right is 5 lakh rupee. What is the fair value of the right? 5 lakh rupee. The government has provided free mining right to the company for 5 years and the fair value of such right is 5 lakh rupee. So government told Hindalco Industries Limited, which is into the mining, minerals and mining business, government has given a free mining right that you can explore, you just drill and you can get the mineral out of this mining for next 5 years. And the fair value is 5 lakh rupee. So what is the accounting entry? At what value this mining right intangible asset will be recognized? So the first option is recognize the asset at fair value, asset and government grant at fair value. What is the accounting entry? This is a revisionary class. I expect the accounting entry from all of you.
Yes, sir.
So
Mining rights.
mining rights 5 lakh to government grant 5 lakh.
Yes, mining right intangible asset account debit 5 lakh to deferred government grant 5 lakh or government grant liability 5 lakh. Okay, this is the entry at the date of recognition of rights. Now tell me, we have recognized a government grant liability and we have recognized an asset of 5 lakh also. So this asset belongs to us only for 5 years and we are not required to pay any money to the government back. So how this government grant liability will become zero and how this asset will become zero?
That every year the asset mining rights asset will be amortized for 5
Amortized.
years. Yeah.
Yes. And what about liability? Government grant
Liability, that the revenue will be recognized on each year by 5 lakh divided by 5.
Yes. So
1 lakh.
your government grant asset and government grant liability. Government grant asset means mining asset, mining right, and deferred government grant, which is liability. Both are required to be amortized over a period of 5 years. And when asset will be amortized, then amortization expenses will be debited. When liability will be amortized, then other income will be credited, right? So in this case, what is the accounting entry? Amortization account debit to mining rights, right? Deferred government grant to other income, 1 lakh. So you will find asset 5 lakh, liability 5 lakh. Balance, every year you will find income 1 lakh, expense 1 lakh. So net profit impact 0. Okay. Now option number two. First option, recognize government grant asset and liability at fair value. Option number 2, recognize the intangible asset at nominal value. Nominal value means at times government said, okay, I'm giving you mining right free of cost, but you have to get the registration done. And for the registration, the government will charge 1 lakh rupee stamp duty. So what is the value of intangible asset if you are going by the nominal value approach?
1 lakh rupees.
In the mining rights intangible asset account debit 1 lakh rupee, credit what? What will be credited? Debit तो ठीक है, credit क्या करें?
Sir, expense account?
क्रेडिट बैंक, क्रेडिट एक्सपेंस थोड़ी होता है, क्रेडिट बैंक होता है ना.
हाँ, yes sir, 1 lakh.
Yes. So because whatever the stamp duty paid, the asset has been debited. तो कैश और बैंक की तो क्रेडिट होगा, right? So mining right intangible asset account debit to cash or bank account 1 lakh rupee. But let's say government has given completely free of cost, even no registration charges. And the second option is nominal value approach. So if the company is adopting a nominal value approach, what is the value of this intangible asset?
1 rupee.
1 rupee. Assuming there is no registration charges. Mining right intangible asset account debit to other income 1 rupee. This is the concept of Ind AS 20 also. If you have covered this concept in Ind AS 38, so one of the important concept of Ind AS 20 government grant has also been covered, right? You are not required to cover this concept of government grant separately, right? It is already covered. It is already covered. Is that clear? Any doubt, any question here? Lavanya, Sachi, any question?
Clear,
Any
sir.
doubt?
No, sir. Thank you.
No? Okay, very good.
No.
Internally generated goodwill we discussed, it cannot be capitalized. The recognition is prohibited in Ind AS 30 years. Sorry. Now let's come to the last padao of mode of intangible asset. Internally generated intangible asset. Friends, like pharma companies, when the COVID came, all these pharma companies were engaged in what? In which activity? किस एक्टिविटी में engaged थी pharma companies? In developing the
Research,
COVID vaccine.
research,
In
research
developing,
of COVID.
in research of COVID vaccine, COVID medicine, right? So all these pharma companies are in continuous engagement of developing the formula, right? So they are doing a lot of research and they are spending millions and billions into research. It's not like whatever medicine you eat, whatever medicine not eat you take, right? Eat is not the right word.
आरती, ये मसाला तो खराब नहीं हुआ होगा ना? अच्छा,
Excuse
सब्जी का
me.
मसाला बनाते
Sachi,
हैं,
Sachi,
खराब
can you
होगा।
please keep on mute? Yeah. Yeah. So the point is, whatever medicine you take, okay, so it is not as simple as the doctor has prescribed the medicine you take and you got healthy, right? This medicine, this formula, this salt, this composition has experienced a lot of research and development. So likewise, internally generated intangible asset also requires to be passed through with the two different phases, which is known as a research phase and development phase. What is meant by research phase and what is meant by development phase? So research phase means when you acquire knowledge is known as a research phase, right? So basically, when the company started searching a COVID vaccine, right? So the company were not having any idea how to kill the coronavirus. Okay, but the companies were doing lot of experiments, doing lot of research. What could be the salt? What could be the antivirus which will kill the coronavirus? Okay. So on the day one, they were not clear. If on the day one they would have been clear, so much amount of time would not have been taken to develop the COVID vaccine. So they were doing a lot of research for acquiring a knowledge. But once they demonstrate that, yes, now we have acquired a knowledge, now we have to apply our knowledge, whatever we gathered so far, we have to apply our knowledge. We have to apply our knowledge in development of that medicine, right? So what is the research phase? Research phase. What is the research phase? Research phase is my acquisition of knowledge. What is the development phase? Development phase is my application of knowledge. Research phase is acquisition of knowledge. Development phase is application of knowledge. Okay. Application of knowledge. Friends, amount spent in research phase shall be charged to P&L. Amount spent in development phase shall be capitalized. So once we demonstrate that yes, now our knowledge has been gathered, now we are spending money to develop this knowledge so that this intangible item will start giving us economic benefit. Okay. So there are research phase, there are development phase. Whatever money you will spend, it is just like a sunk cost, right? The company has spent millions and billions. Every company was not successful. Tell me, the money which they have spent in the research phase, can that be capitalized? It has become the sunk cost. It has become the sunk cost. It will not be capitalized. It has become the sunk cost. Okay. So, but once the company has demonstrated, yes, now we have acquired a knowledge or development phase has started. In that case, you start capitalizing those expenses incurred for development. Now, friends, when you will consider that development phase, has started, friends, you will consider development phase has started when six condition will meet. When six condition will meet. Condition number 1, future economic benefit. And I call this condition as a pirate. What is meant by pirate? Pirates of the Caribbean. What is meant by pirate? Yes.
Thieves in the sea, sir.
Thieves in the sea. Okay. Pirates means thief in the sea. So this pirate is your condition of meeting development criteria. P stands for probable future economic benefit. Your future economic benefit should be probable. Okay. Means you have done a lot of research. Now you got some knowledge. And if your knowledge, you believe that it will give us future economic benefit, means when I will apply this knowledge, I will be able to develop a medicine or a formula, and we will get the future economic benefit by selling that formula or by selling the medicine manufactured through that formula. So probable future economic benefit. Intention to complete and use or sell the asset. There must be intention. For example, many companies, they were so tired in doing research, they said, no, now it's over. Now there is no use. It's been 7 months, 9 months. Many companies have already on the verge of development and we are still, gathering the knowledge. There is no use. So basically, if their intention to complete and use or sell the asset is there, then it is okay. If their intention to complete is not there because they are lack of resources or lack of something else, so in that case, you cannot say that development phase has started. So for development phase, future economic benefit should be probable. Intention should be there to complete the development. Resources should be adequate, right? So you spent a lot of money over the last 1 year. Now you're out of funds. So you don't have resources. Or your scientist and doctor has already left out. They joined another companies. Okay, why? Because of the cash crunch. So there should be resources also, right? Ability to use or sell the asset must be there. You gather knowledge and everything. You now decided to develop that formula. But now government said, no any private company can produce or can manufacture the medicine or antivirus for that COVID. Now tell me, will you able to use or sell the asset? Will you able to use or sell the formula?
No, sir.
No, because government is banned. Your intention is there, but your ability is not there, right? So intention has to be there and ability has to be there, both. Technical feasibility has to be there. It is technically feasible also to develop that, to develop the formula. Expenditure, last one is expenditure can be reliably measured. If this 6 condition will be satisfied, then you can say that, my development phase has started. And whenever the development phase will start, you will start capitalizing that cost. Quickly, let's understand. A company has started doing a research for a medicine on 1st April 2019. The company has spent 50 lakh rupee till 31st May 2021. On 1st June 2021, so the company has spent 50 lakh rupee till 31st May. From 1st April 19 to 31st May. On 1st June 2021, the company has met all the criteria for development. On 1st June 21, the company has met all the criteria for development and spent 30 lakh more till 31st March 2022. Okay. So in this case, what is my research phase and what is my development phase? From which date development phase is started?
Sir, from 1st June, development phase has started, sir.
So from 1st April 19 to 31st May 21, my research phase is there. And from 1st June, development phase is started. My total cost is 80 lakh rupee. So tell me, what is the treatment of 50 lakh and 30 lakh? What is the
Sir,
treatment
50
of
lakh will be
yes,
expensed off and 30 lakh will be capitalized.
30 lakh will be capitalized, right? If a company is not able to identify between the research phase and development phase, then treat it as a research phase and charge the expenditure to P&L. For example, the company is not able to demonstrate that whether my development phase has been started. So in the benefit of doubt has to be given to the P&L. So in that case, the company has to consider that phase as a research phase. The company has to consider that phase as a research phase, right? Okay. Is that clear? Okay. Now
Yes, sir.
quickly. Friends, let's discuss a question on these research phase and development phase, etc., etc. Let's discuss question number 4. I hope question number 4 is visible. Is it visible or not visible?
Yes, sir, visible, sir.
Okay. Question number 4. X Pharmaceutical Limited seeks your opinion in respect of following accounting transaction. Acquired a 4-year license to manufacture a specialized drug at a cost of, drug means medicine. Okay. Acquired a 4-year license, okay, to manufacture a specialized drug at a cost of 1 crore rupee. At the start of the year, production commenced immediately. Tell me, what is the accounting treatment of transaction number 1? This company has purchased a 4-year license. What is the accounting treatment?
Sir, license to bank 1 crore.
License to bank 1 crore. This is a purchase of an intangible asset. In case of a purchase of an intangible asset, it has to be measured at cost. It has to be measured at cost, right? So you are absolutely right. License intangible asset account debit to bank account 1 crore rupee. Very good. Second, also purchased another company at the start of the year. Now, Sachi, it's your turn. Also purchased another company at the start of the year. As part of that acquisition, X Pharmacy Limited acquired a brand with a fair value of 3 crore rupees based on the sales revenue. So this X Pharmaceutical Limited purchased another company. Now it is a business acquisition, business combination. And part of acquisition, X Limited also acquired a brand with a fair value of 3 crore based on the sales revenue. Life of the brand is estimated at 15 years. Tell me, what will happen? Sachi, it's your turn now. How will you record the brand?
Yes,
Yeah.
sir, please. एक बार again.
Yeah.
10 lakh rupees.
Second, question number 2. So this company has acquired a brand by acquiring a company. And I told you that in case of business combination, business acquisition, intangible asset has to be measured at fair value. So what is the fair value of the brand? 3 crore rupees. Okay. So this brand has to be recorded at 3 crore rupees. Brand has to be recorded at fair value 3 crore rupees. Right? What is the answer? It should recognize the brand as an intangible asset because it is purchased as a part of business combination and separately identifiable. The brand should be amortized over a period of 15 years. Okay. So 3 crore rupees brand has to be measured at fair value. Now question number 3, Saminathan, it goes to you. Spent 1 crore rupee on an advertising campaign during the first 6 months. So they put hoarding, boarding, right? Given newspaper advertisement, a TV ad. So the strip is the strip is flowing when the news is telecasting. Okay, they're given a lot of advertisement. Subsequent sales have shown a significant improvement, and it is expected that this will continue for 3 years. What should we do for this advertisement campaign for which we have incurred a spend of 1 crore rupee?
Yes, sir. Here that future economic benefit is measurable, but however, the advertising expenditure with capitalization of intangible assets is prohibited in India AS 38, particularly for this item.
Yes. So you are
It has
absolutely
to be it has to be expensed.
yes, you are absolutely right. Because you don't have a control on the advertisement benefits. You don't have a control. For example, a coaching center put a one-page advertisement in the newspaper. They paid 5 lakh rupee. They put a one-page, full-page advertisement in Economic Times, Hindustan Times, Dainik Bharat Times, all the times. So they have put the advertisement in the newspaper. But no any student came to that coaching center. So can they blame the newspaper agency that I have given the advertisement in your newspaper and even a single student has not come?
No.
Answer is no. They don't have any control on the advertisement, right? They don't have any control on the advertisement benefits. So basically, and you are absolutely right. This advertisement recognition of advertisement expense as an intangible asset is prohibited under Ind AS 38. It is not allowed at all. It is not allowed at all. Right? Very good. Absolutely right. Very good. Perfect. Yes. So it has to be charged to expense. Now, question number 4. It has commenced developing a new drug A. Drug again means formula, medicine. The project cost, so they are developing a new medicine. The project cost would be 10 crore, 10 lakh, 10 crore. Clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. Right? Clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. Okay. Cost incurred till 31st March 2001 is 5 crore. Is 5 crore. Okay. So what they are saying, clinical trial proved successful and such drug is expected to generate a revenue over the next 5 years and cost incurred till date is 5 crore. Balance cost incurred during the financial year, next year financial year is 5 crore. The total project cost is 10 crore and the clinical trial proved successful and this drug will generate future economic benefit for 5 years. Up to 31st March 2001, already cost incurred is 5 crore. In the next year, the remaining cost will be incurred in the next year. Now the question is, what is the treatment of this 5 crore and another 5 crore? Tell me.
Sir, if we assume till 31st March, if it is as a research phase, then this 5 crore will be expensed off and the remaining 5 crore will be capitalized.
Sure. See, in this case, while you can say that, but in this case has not given, in this question, it has not given what is the date of clinical trial successful, right? It only says that clinical trial proved successful and such drug is expected to generate future economic benefit. Cost incurred till date is this much and this much. So in that case, you should assume that, and this is the answer which is given in the question also. You should assume that the 5 crore rupees which is given, which is spent till the last time, till the last year, till 31st March, it was also a development cost, right? You can assume that, and you should write that the development cost incurred during the financial year 1-2 should be capitalized. Okay. And the remaining cost of 5 crore, it will also be capitalized, and the opening cost of 5 crore will also be capitalized. The total cost has to be 10 crore rupees, right? But if you assume no, I have reached the development phase on 1st April 2001, then you are absolutely right. Okay. Okay. Now question number 5. It has also commenced developing another drug B. It has incurred 50 lakh rupee towards research expense till 31st March 2002. The technical feasibility has not yet been established. Then
Entire amount to be expensed off.
entire amount will go to the expense because it is a research phase expense. It is a research phase expense. Entire amount will go to the P&L, right? So this is what we have covered so far. This is what we covered. Question number 1, exchange of asset. Question number 5, business combination. Question number 4, different mode of intangible asset acquisition, which largely includes your internally generated intangible asset also, right? Have you guys enjoying? Have you understood? ये रिवीजन
Yes, sir.
आपका हो रहा है? अगर आपको याद भी नहीं था तो याद आ गया आपको या नहीं
Yes, sir.
आया अभी भी?
Yes, sir. Yes, sir.
Yeah. Subsequent measurement. Now, my dear friends, are you able to see the screen?
Yes, sir.
Subsequent measurement. Yes. So we covered initial recognition and measurement. Now I move to subsequent measurement. My dear friends, intangible asset just like a tangible asset, PP&E. Intangible asset can be measured either using a cost model or using a revaluation model. Two models are there, cost model or revaluation model. Whatever model the company will apply, be it cost model or revaluation model, it should apply consistently to that entire class of asset. It should apply consistently to that entire class of asset, right? Be it the cost model, revaluation model, it has to be applicable to the class of asset. Okay. What is meant by class of asset? Class of asset means grouping of similar asset having same nature and use in an entity's operation, right? Grouping of similar asset having same nature and same use in entity operations. And the same definition is given in PP also. What could be the example of class of asset? For example, software, patent, copyright, trademark, formula, goodwill, IPR, technical know-how, license, mining rights. So these are the examples of class of asset. And let's understand whatever model has to be applicable, it has to be applicable as per the class of assets, right? For example, software A, you have opted a revaluation model for software A. Okay. And for software B and C, you have opted for a cost model. Whether this treatment is correct?
No, sir.
Why?
Software is entire class of asset. We should apply same model.
Software is a class of asset, and whatever model you apply, be it revaluation or cost, you have to apply the same model for all three class of asset. Okay. Now, second case, software A and B, you have opted for revaluation model. Software C, you have opted for cost model. Why? Because the active market is not there for software C and company is not able to determine the fair value. Tell me, is it correct now?
Sir, correct, sir. Because in this case, we cannot identify fair value
Yes,
for
the
software.
exception. Yes, you are absolutely right. What is the exception given in the standards says that correct. The company has to apply the same model for all the asset in a single class. However, if any asset's fair value cannot be determined, in that case, that asset can be carried at cost model. Okay, right? Okay. What is my cost model? What is my revaluation model? You understand that while computing the carrying value on the reporting date, if you have opted for a cost model means you will continue to record your asset on the basis of cost which was incurred on the date of transaction. What is your carrying value? Your carrying amount should be cost minus accumulated amortization minus accumulated impairment losses. For example, A Limited has purchased a software for rupees 1 lakh. Life of software is 4 years. Calculate the carrying amount at the end of every year. So cost 1 lakh, amortization 25,000. Right? So every year 25,000 rupees amortization. What is the carrying value every year? At the end of the first year 75,000, second year 50,000, third year 25, and fourth year 0. Right? Second example. A Limited has purchased a software for rupees 1 lakh. Life of software is 4 years. Calculate carrying amount at the end of the every year, assuming the recoverable value at the end of the second year is 40,000. So in the first year, what was my cost? 1 lakh. What was my amortization? 1 lakh divided by 4, 25,000. So cost minus accumulated amortization minus accumulated impairment losses. So in the first year, there is no impairment loss. What is my carrying amount? 75,000. In the second year, again, I will charge 25,000 rupees of amortization. 50,000 is my carrying value, but impairment loss is 10,000. Impairment loss is 10,000. So what is my carrying value at the end of second year?
40,000.
40,000 is the carrying value at the end of the second year. 40,000 is the carrying value at the end of the second year, right? What is my amortization in the third year? Now, if my carrying value is 40,000, remaining life is 2 years. So I have to prospectively reset my amortization. This 40,000 has to be depreciated, amortized over the next 2 years. So 40,000 divided by remaining useful life. 20,000 is the amortization every year. And this is how you compute the carrying amount. Okay. But
Yes.
when you opted for a revaluation model is the based on fair value. So what is your carrying amount? Carrying amount is revalued amount minus subsequent accumulated amortization minus subsequent accumulated impairment losses. For example, A Limited has purchased a software for rupees 1 lakh. The life of software is 4 years. Company has revalued the software at the end of second year. The fair value comes out to 1.1 lakh. What is my first year amortization?
1 lakh divided by 4.
25,000. 1 lakh divided by 4. What is my carrying amount at the end of first year? 75,000. What is my amortization in the second year? 25,000. What is my carrying amount at the end of second year? 50,000. But the company has opted the revaluation model, and the revalued amount is is 1.1 lakh. Okay. So what is my fair value or revalue amount? 1.1 lakh. This will become my carrying value at the end of second year. So where the differential from 50 to 110, what is the differential? 60,000. Where the 60,000 will go? Where the 60,000 will go?
Revaluation reserve.
Revaluation
OCI.
reserve where? OCI.
OCI.
OCI. So the difference between this difference of 60,000 will go to revaluation surplus OCI. Okay. Now at the end of second year, your revalue amount, your carrying amount become 110. What is the amortization in the next year and the last year? Third and fourth year.
110 divided by 2, 55,000.
110 divided by the remaining useful life, which is 2. So 55,000. So in the third year and fourth year, prospective amortization is 55,000 and 55,000. Okay. Is that clear? Now, revaluation impact. If you opted for a revaluation model, you will have a revaluation surplus. Where that revaluation surplus will go? OCI. OCI. Now, assuming in the first year you have a revaluation surplus of 60,000 rupees. So what is the accounting entry?
Asset account debtor to revaluation reserve account, OCI.
Asset account debit to revaluation surplus OCI, 60,000 rupees. In the next year, when you revalue, there was an impairment of 40,000 rupees. What is the accounting entry of next year impairment?
Impairment account 40,000 to revaluation reserve 40,000.
No. See,
Just
We
think
will
about that. Just hold on, Saminathan. So think about the accounting entry which you are giving. Revaluation surplus was
sir,
credited in the first year when there was an upward revaluation. When there is a downward, also you have credited revaluation surplus.
no, sir. We will credit asset.
So yes, you will debit your
Asset
revaluation
account debit to
surplus.
revaluation.
Yes, you will debit revaluation surplus. In the first year, you have credited revaluation reserve, revaluation surplus. You debited asset because asset has gone up, and you credited reserve also, right? Revaluation surplus also, OCI reserve, 60,000. Next year, there is an impairment loss of 40,000. So will you debit impairment loss in the P&L? Answer is no. So till the time you have the balance in the revaluation reserve account, whenever there is an impairment, you have to utilize the balance from the revaluation surplus account. Okay. So in this case, you have to debit revaluation surplus by 40,000 and credit asset by 40,000. Now, what is the balance lying in the revaluation surplus account?
20,000.
20,000. In the next year, again, the company has revalued the asset, and again, the impairment loss is 30,000 now. What is the treatment of 30,000 impairment loss?
To the extent of 20,000, we will charge to revaluation reserve, and the remaining 10,000 we will charge to PNL.
You are absolutely right. So revaluation surplus account 20,000 debit. Then your impairment loss P&L account 10,000 debit. Credit asset account 30,000. Very good. Now, another scenario. First time you did a revaluation and you got a loss of 20,000 rupees. First time. What is the accounting entry? First time revaluation किया उसी में loss आ गया. What is the accounting entry?
impairment of loss account debit to asset account.
Impairment loss P&L account debit to asset account. Very good. Then next time you again did a revaluation. Again loss came by 30,000. What is the accounting entry?
Again, same. The impairment of loss of P&L account debit
Impairment
to
loss P&L to asset. Okay, now what is the total impairment loss you have debited in the P&L in the last 2 years?
50,000.
50,000.
50,000 rupees. Very good. Now, what happened? In the third year, you did a revaluation and there is a revaluation gain of 60,000 rupees. There is a revaluation surplus of 60,000 rupees. What is the accounting entry you will pass? What is the accounting entry you will pass? First of all, whatever impairment loss you have earlier debited, how much
Asset
impairment loss you have
account
debited?
50,000.
50,000.
So your revaluation gain is 60,000. So to the extent of impairment loss debited in P&L earlier, you will reverse that. So you will credit impairment loss by 50,000. Means you will credit in the P&L by 50,000. But how much asset you will debit? 60, because asset is 1 by
60,000.
60.
60.
So asset account debit 60,000, credit impairment loss. Now it become impairment gain 50,000. Then where the difference 10,000 will go?
Revaluation surplus.
Revaluation surplus OCI, revaluation reserve OCI. Okay. So have you understood revaluation, debit, credit, OCI, impairment, loss, gain, surplus, loss? Clear or not clear?
Clear, sir.
Now, how you will utilize your revaluation surplus? Let's say you have a revaluation surplus. How you will utilize your revaluation surplus? कैसे utilize करेंगे revaluation surplus को? Now, there are two ways. There are two stages for utilizing a revaluation surplus. There are two stages. What are the two stages for utilizing a revaluation surplus? Stage number one, at the time of disposal or derecognition of asset. At the time of disposal or derecognition of asset. Okay. When you are disposing or derecognizing the asset, whatever amount is standing in the revaluation surplus, the entire amount will go to retained earning. Revaluation surplus account debit to retained earning. Entire amount. Right? So you have to transfer your revaluation surplus account to retained earning. But you want to transfer your revaluation surplus into bits and pieces, right? During the life of the asset, you want to transfer the revaluation surplus into the bits and pieces. Okay. Again, you will transfer to the retained earning. So, for example, the life of the asset is 10-year intangible asset. In the first year, you got the revaluation surplus of, let's say, 50,000 rupees. So now remaining life is 10 year. Okay. So you have to transfer bit of revaluation surplus every year, but credit will be always retained earning. But what is the amount you will transfer? So the revaluation surplus can be utilized every year to the extent of extra amortization. For example, life of the asset is 10 year, cost is 1 lakh, revalued amount is 1,40,000. So what is my revaluation surplus? 40,000. But when it was 1 lakh rupee, what was my depreciation? My amortization
10,000.
10,000. But when it become 140, for example, my amortization become 14,000. How much is extra amortization?
4,000.
4,000. So I can transfer every year revaluation surplus account debit to retained earning 4,000. Okay. This is how I'll do. So let me discuss one question again from my Word file. Allow me 2 minutes to look at the question. Question number 2, question number 3. Question 4 we covered, question 5 we covered. Question number 7.
So,
Just a minute, just a minute. Okay, the direct question on this part is not there in my Word file, while we have covered in the detailed class, but it is not there in my Word file. Okay, no problem. No problem. Right. So basically, let's cover the concept of useful life and we'll do a question on this. Okay. So this revaluation model, cost model is not that complicated. You can cover from the full class this question. But now we need to discuss the useful life of intangible asset concept. What is my useful life of intangible asset concept? Tell me, let's say a government has given a license for 10 years. Okay. What could be the useful life of that intangible asset?
10 years.
It could be more than 10 years?
No,
No,
sir.
sir.
Because the contract is only for 10 years.
It could be less than 10 years?
Yes, sir.
Yes. Yes.
yes,
Why?
sir.
Why?
Even though contract is for 10 years, we can utilize only for 7 or less than 10 years.
Yes, your useful life is your future economic life. Economic life means a life which you can use, right? So you went to the market and bought 3 books on FR. You bought 3 books on FR, financial reporting. Is it necessary you read every book on FR? Or you went to buy a book from the shop and the shopkeeper said, this book is complimentary. This book is coming with this book. Okay. So you had to take that book as well. So is it necessary you will read that book also? Not necessary. Not necessary, right? So the point is what I'm making here, and the second example, which you guys have always witnessed in your life. Second example, and Saminathan know that example. So tablet. Have you ever bought a medicine? You all are
Yes,
CA
sir.
final student. So you all have completed 18, 20 years of minimum life. You have completed, okay? Being a CA final student. So you must have purchased a medicine, right? And Saminathan has, he has written over the chat box also. So you had a headache, or let's say you have some allergy. You went to the doctor and doctor given you antibiotic for 4 days. Doctor said you have to complete the course for 4 days. Every day you need to take one antibiotic. So how many tablet in the course? 4 tablet. You have to take 4 tablet. You went to the medicine shop, right? Pharma shop. And the shopkeeper told you, sorry, we don't sell loose tablet. We sell only strip, right? हम पूरा पत्ता बेचते हैं. We are selling a strip of 10 tablet. We are not selling 4 tablet. Now tell me, will you take entire 10 tablet? I mean to say, will you take a dose of entire 10 tablet, or will you take a dose of only 4 tablet while you have purchased 10 tablet? Sachi, what will you do?
4 only, sir.
4 only?
Because it is a useful only for 4 tablets only.
It will be useful only when you take 4 tablet, right? If you will take a dose of 10 tablet, it will be overdose, and instead of it is fixing the issue in the body, it will create more issue in the body, right? So for you, the usefulness, the economic value is only in the 4 tablet, not on the 10 tablet. But the shopkeeper, since they don't sell loose tablet, they sell the entire strip of the tablet, and that is why they have given you 10 tablet. Now, let's translate it into the intangible asset useful life example. What is the total contractual life? What is the total contractual life? The strip of the medicine, the strip of tablet is the total contractual life. What is that? 10 year. What is the useful economic life? What is the economic life? What is the useful life, Sachi?
4.
4. Right. So in this case, whatever money you have spent on buying 10 tablet means whatever money you have spent on acquiring intangible asset, you will amortize over 4 year or 10 year.
4 years.
You will amortize over 4 year. Okay. So useful life is driven by contractual or legal rights. Your useful life cannot exceed contractual or legal right, but useful life may be shortened than contractual or legal right. Okay. Right. Clear? For example, the government of India has given a mining rights to X Limited for a period of 10 years. X Limited is expecting a future economic benefit for a period of 5 years only and expecting to use this right for 5 years. What is the useful life in this case? Contractual life is 10 years, useful life is 5 years. Okay. Useful life is 5 years. Now, your useful life could be 2 types. कौन सी 2 तरह की हो सकती है? Your useful life is always of 2 types. Tell me. There are 2 types of useful life. It could be definite, I mean to say finite, and it could be indefinite also. It could be indefinite also. Let's take an example. The company purchased a telecom license, or the company purchased a mining right from the government for 10 years. In this case, whether the life is indefinite or life is definite, means finite.
Finite, sir.
Life is finite. 10 years. The company acquired another company. Okay. And the company has given a huge amount of premium because the valuation are much higher for that company. And the company has given a huge amount of premium, which the company has capitalized as a goodwill. Company has not any certainty that till how many years this company will get the future economic benefit due to this goodwill, right? Since the company has paid a huge extra amount, additional amount, premium, the company does not have a clarity that for how long the company will pay this extra. So how long this company will get the extra benefit, extra future economic benefit. पता नहीं है, contractual तो है नहीं कुछ. Nothing is contractual. So tell me, in this case, whether life is definite or life is indefinite.
Indefinite.
Indefinite. So friends, if the life is finite, right? If the life is finite, what you will do, if the life is finite, you will amortize your intangible asset over the useful life. For example, cost of license is 10 lakh, life is 10 year, amortization is 1 lakh. But when the life is indefinite, then what you will do? Indefinite matlab? When life is indefinite, it means entity does not foresee that future economic benefit will be available for how many years. Okay. So if the life is not known, will you be able to amortize? If life is not,
No, sir.
you will not be able to amortize because you don't have denominator. Amortization is not, possible. Okay. Right. So if amortization is not possible, then what will you do?
Impairment testing.
Impairment testing. My dear friends, there is a concept given in Ind AS 36, impairment of asset standard. You know what that standard says? That standard says that Ind AS 36, that standard says that there are three type of asset. There are three kind of asset. Intangible asset having indefinite life. Intangible asset not yet available for use, and goodwill acquired in business combination. For these three kind of asset, you have to do the impairment testing on an annual basis, on a mandatory basis. आपको मिनिमम, आपको impairment testing साल में एक बार करनी ही करनी है. Okay, and this is what Ind AS 38 also says. Ind AS 38 for indefinite life, Ind AS 38 says that it is mandatory to what? It is mandatory to do the impairment testing on an annual basis. Okay. Once in every year. Now, sir, if at the beginning of year we find that, if in the beginning of year we find that this intangible asset has a indefinite life, will we consider this indefinite life for lifetime? पहली बार में इंटेंजिबल एसेट की इंडेफिनिट लाइफ हो गई तो मैं क्या इसको लाइफ टाइम इंडेफिनिट मांगूंगा?
No, sir. We have to review every year.
We have to review every year whether this indefinite become finite, whether this indefinite become definite. We have to review every year. Okay, if this indefinite become definite. What is my example of indefinite life? What is my example of indefinite life? A Limited acquired a business and capitalized a goodwill of rupees 1 lakh. Let's discuss this. At this juncture, the company is not able to determine the life of the asset in which it will receive the future economic benefit. So when this goodwill was acquired, it was indefinite life. At the end of the second year, the recoverable amount is 70,000. In the beginning of third year, the company was able to identify that the remaining life is 5 years. This question is classic example of indefinite life. Then another year impairment, then it will become a finite life, right? So conceptually, if you see these 4 lines, conceptually, you will get a conceptual clarity. These example in Excel file will give you a conceptual clarity. Right? What is my cost of goodwill in the first year? Beginning of first year, 1 lakh. Will I have any amortization in the first year? No. Why? Because I don't know the denominator. What is the denominator? Useful life. So amortization is not possible as the life is not determinable. Carrying amount at the end of year 1, 1 lakh. What is my amortization in second year? 0. But at the end of the second year, my recoverable value is 70,000, which will become my carrying amount. So what is my impairment loss? 30,000 rupees will become my impairment loss. Okay. Now, in the beginning of year 3, means at the end of year 2, what is the life? Now, how much is the definite life? The entity can foresee that my intangible asset now will provide the another, only 5-year economic benefit. What will I do now? Now I start amortizing.
We will amortize.
So amortization 70,000 divided by 5 every year, 14,000 is the amortization amount. Right? Clear? Is that clear? Not clear? Is it clear or
Clear, sir.
not clear? Clear?
Clear, sir.
Clear. Let's discuss question number useful life. Question number 3. Let's discuss question number 3. X Limited, question number 3. X Limited has a patent. X Limited has a X Limited purchase. I hope this word file is visible. Yes?
Yes, sir.
Okay. X Limited purchased a patent right on 1st April 20x1 for rupees 3 lakhs. So this patent was purchased for rupees 3 lakhs, which has a legal life of 15 years. However, due to the competitive nature of the product, the management estimates a useful life of only 5 years. So what is the contractual life? 15 years. What is the useful life which management is expecting? 5 years. Means my useful life is shorter than my contractual or legal life. And what is my cost? My cost is 3 lakh. Okay. So tell me, just reading these 2.5 line, what is my amortization period?
5 years.
5 years.
5 years. Straight line amortization is determined by the management to be the best method. Which method they have considered?
SLM.
What are the 3 methods in terms of depreciation and amortization? What are the 3 different methods?
So straight line, WDV, and unit of production method.
Yes. Unit of production method. Some people call it as a unit of digit method also. Okay. 3 method. Straight line method, WDV method, unit of production method. Okay. What is a straight line method? A straight line method is a method of depreciation or amortization which gives you a constant expense of depreciation or amortization. Same depreciation or amortization expense. What is your WDV method? Your WDV method gives you a reducing depreciation or amortization expense. What is your unit of production method? Your unit of production method or unit of digit method gives you the depreciation or amortization based on the basis of consumption of the asset. SLM method of depreciation is appropriate when the company will expect the constant straight line future economic benefit. WDV method is appropriate when the company is expecting higher benefits in initial year and then subsequently there is a declining benefits. And unit of production method is appropriate in a situation where the company will get the benefit only on the usage of the asset, right? So these depreciation or amortization method we have covered Ind AS 16 PP depreciation method also while discussing Ind AS 38 amortization method, right? This is how you can smartly do the revision of your other standard also. So the point is these depreciation method, tell me the change in depreciation method is considered as a change in policy or change in estimate?
Change in estimate.
This will be considered as a change in estimate. Okay. So straight line method amortization is determined by the management to be the best method. Okay. SLM is applicable. This life is 5 years. Okay. As on 1st April 2002 means after 1 year. After 1 year of purchase. Management is uncertain that the process can actually be made economically feasible and decide to write down the patent to an estimated market value of 1.5 lakh. So what it denotes?
Impairment.
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 Management is uncertain that the process can actually be made economically feasible and decide to write down to the patent. Write down means impairment. At an estimated market value of 15 lakh, 1.5 lakh rupee and decide to amortize over 2 years. So after 1 year, what was the life? What was the life of the patent? Useful life, 5 years. Legal life was 15 years, useful life was 5 years. After 1 year, what should have been the remaining life after 1 year? 4 years.
4 years.
4
4 years.
years.
Instead of 4 years, how much after 1 year? How much this company is expecting now?
2 years.
2 years. Okay. Means prospective amortization will also increase, or increase, I mean to say, the denominator will not be 4, the denominator will be 2. As on 1st April 2003, now next year again, having perfected the related production process, now they have improved the production process. The asset is now appraised at a value of 3 lakh rupee. The asset is now appraised at a value of 3 lakh rupee. Furthermore, the estimated useful life is now believed to be 4 more years. Furthermore, the estimated useful life is now believed to be 4 more years. So after completion of 2 years, when the expected 1 year was left, so now they decided to have a 4 year more life. It is a change in estimate. It can be done. Yes. Determine the value of intangible asset at the end of each financial year. I will take a 30 seconds pause here. 30 seconds pause. And I want your answer quickly. Anyone can volunteer. So not Saminathan. Anyone can volunteer, and I would request who want to volunteer? Lavanya, you want to volunteer?
Yes, sir.
Tell me. Yes.
Sir, what is the question, sir? Answer.
What is the
Question, sir.
My question is, so determine the value of intangible asset at the end of each financial year. This is the question. And the question is in front of you. Question is on the screen.
Yes, sir. At the end of first year, 3 lakh divided by 5,
Yes, very
we
good.
will get amortization of 60,000 and carrying value will be 2 lakh 40.
Very good. Yes, because when you purchased this, 3 lakh rupee was the value and life was 5 years. 60,000 is per annum amortization. 2.4 lakh is the value at the end of the first year, means 1st April 2000, 31st March 2002, right? Okay. Now what
Yes,
happened?
sir. At the on April X2, there is an amortization. There is a impairment loss,
Yes.
and the impairment loss is 90,000, and
Very
carrying value will become 1 lakh 50.
Yes. So 31st March 20X2, 2.4 lakh was the carrying value. This will become the opening balance on the 1st April X2, 2.4 lakh. But on 1st April X2, the recoverable value is 1.5 lakh only. So you need to recognize an impairment loss of 90,000. Very good. Yes. Now, what is the
Now
current year?
carrying value
Two,
will be
three.
1 lakh 50, and years will be 2 years,
Yes. Yes. So
and we
what
will
is the
amortize
amortization on 31st March X3?
75,000.
Very good. And what is the carrying value?
75,000.
Very good. So my 31st March X3, my carrying value is 75,000. Okay. This will become the opening value on 1st April X3. Now what happened on 1st April X3?
There is a revaluation again, and we have revaluation surplus of 2 lakh 25,000.
Why 2,25,000? Because they have written that now the value has been appraised to 3 lakh rupee. Okay. Yes, we have a revaluation surplus. Okay. Yes. Now what is the treatment of
Now
this?
carrying value will be 3 lakh,
Okay.
and number of years will be 4 years.
Okay.
We will amortize it for 4 years.
So what is my closing carrying value on
Seven.
31st March X4? 75,000 is the amortization. 2,25,000 is the carrying value. Okay. On 31st March X4, right?
Sir, 2. Yes, sir.
Now tell me, on 1st April 20X3, When you have increased from 75,000 to 2 lakh, 75,000 to 3 lakh, when you debited your asset by 2 lakh 25,000, what is the credit? What is the
So
account?
to the extent of 90,000, we will reverse the earlier amortization loss. I mean impairment loss.
Yes. Okay.
And remaining 1,35,000, we will credit to revaluation surplus.
This is absolutely awesome. I was not expecting that you will tell me that 90,000, to the extent of 90,000 impairment loss will be reversed in the P&L, and 1,35,000 will go to revaluation surplus OCI. This is
Yes.
absolutely awesome. Right. Thank you so much. You are absolutely right. So you have answered it very well, Lavanya, very well at every stage. And it is in front of you. You can see that. You can see that, right? The first year carrying value was 240. The second year carrying value was 75,000. Then third year there was a 2,25,000 of revaluation gain. Out of the revaluation gain, 90,000 was credited to P&L and 135 goes to OCI. Okay. And what is the amortization in that year? 75,000. 3 lakh divided by 4. And the closing balance is 2,25,000. Okay. Very good. Absolutely fine. Absolutely perfect. Amazing. Great. Yes. Now let's discuss question number 2. Right? Let's discuss question number 2. Expenditure on a new production process is in 20x1x2 is given. 1st April to 31st December. 1st April to 31st December, 2,700. Okay. 1st January to 31st March, 900. Total expenditure is 3,600. This is on a new production process. Okay. The production process met the intangible asset. The production process met the intangible asset recognition criteria for development on 1st January 20x2. Okay, 20x2. The production process met the intangible asset recognition criteria for development on 1st January x2. The amount estimated to be recoverable from the process is 1,000. So 1st January x2, it met the development criteria. Okay, what does it mean?
We have to capitalize the amount.
So it means the expenditure incurred up to 31st December is a research phase expenditure, right? Yes or
Yes,
no?
sir.
So
Yes,
research
sir.
phase expenditure anyway, it will go to P&L. Whether we will impair research phase expenditure, or not,
No, sir,
No,
it will
no,
go
sir.
to
Straight away
P&L में
expenses.
वैसे वो तो डे वन से
expense.
impaired है, वो तो वैसे ही P&L में जा रहा है, right? And 1st January to 31st March, 900 rupee. This 900 rupee, what we have done with 900 rupee? This
We
we
have
start
capitalized.
capitalizing. This we start capitalizing. And what is my recoverable amount? Recoverable amount is 1,000, which is more than what?
Carrying amount.
More than the carrying amount. So if it is more than the carrying amount, should I do any impairment,
No, sir.
or should I reevaluate?
No, sir.
Right? Okay. Okay. Sure. Yeah. So expenditure incurred for development of the process in financial year 23 is 6,000. Okay. So expenditure incurred for development of the process in financial year 23 is 6,000. So more expenditure incurred. Okay, 6,000. What will we do with this expenditure of 6,000?
We will add to the opening balance of
We will add to the
900.
opening balance. We will capitalize it again. When I say capitalize, means you understand, before PPE, it is a CWIP, capital work in progress. So before intangible asset brought into the use, it is intangible asset under development. पता है ना आपको पहले CWIP होता है. So there is a pool account which is known as a CWIP. सो टेंजिबल एसेट का जो सिविप होता है उसको सिविप बोलते हैं, इंटेंजिबल एसेट के सिविप को क्या बोलते हैं? इंटेंजिबल एसेट अंडर डेवलपमेंट, ITUD, इंटेंजिबल एसेट अंडर डेवलपमेंट. Okay, right? So this 900 will become intangible asset under development capitalized. This 6,000 will go to intangible asset under development, and on the date it comes into use, on the date when it comes into use, what happened? The 6,900 will be credit, this intangible asset under development will be credited and intangible asset will be debited, right? Okay. So asset was brought into use on 31st March 20x3 and expected to be useful for 6 years. Means what is my value of intangible asset on the day one? 6,900.
6,900.
What is my useful life?
6 years.
What is my first year of depreciation? I mean to say amortization.
1,150.
So first year मैं पूछता हूँ पहला ईयर कौन सा पहला ईयर होगा amortization का? Is it 31st March 20x3 or 31st March 20x4?
X4.
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 31st March 20x3 को तो कैपिटलाइज हुआ है. 20x4 will be the first year of amortization. Now the question is asking, what is the carrying amount of the intangible asset on 31st March X2 and X3? Also determine the charge to P&L for 20x1, X2. So the first year, what was the first year charge? 20x1, X2?
900.
900.
27.
2,700.
Charge to P&L is 2,700. 900 has been capitalized to CWIP, intangible asset under development. Okay. Now, what is the carrying amount on 31st March 20x3? 6,900.
Yeah,
6,900.
6,900.
6,900. Now, what is the carrying amount on 31st March 20x4?
5,750.
So it is
5,700.
6,900 minus 1150, right? 5,750. But some more information is given on 31st March 20x4. Let me see what is given. On 31st March X4, the recoverable amount is 5,000 only. What does it mean?
Impairment.
Impairment loss.
So after amortization 5,750, but recoverable amount is 5,000. So 750 will be impairment. So what is the carrying amount on 31st March X4?
5,000.
5,000. What is the remaining life? If life was 6 years, 1 year
5
has
years.
gone. What is the remaining life?
5.
5 years. What is the next year amortization?
1,000.
1,000. 5 lakh divide 5,000 divided by 5,000 divided by 5, 1,000. So next year carrying amount is 4,000. I hope it is absolutely, definitely, greatly clear to each and every one of you. Yes.
Yes, sir.
Yes, sir.
Okay. Very good. So we have covered question number 1, 2, 3, 4, 5, 6. Okay. Now let me discuss one more question. Question number 7, and question number 7 is on the purchase price. Good question, I would say. A company engaged in the provision of information technology products and services incurred following expenditure during the development phase. So it is written during the development phase, means talking about capitalization. That is to be offered to the customer. The entity also purchases software from the third parties for incorporating into its end software product offered to the customer. They are also purchasing software as a raw material kind of thing, right? While it is not a raw material, because they are using this for the developing a product. Okay. The company is in the process of launching it in the market for licensing to customer. The company also takes services of external professional software developer. So the company is acquiring some software, the company is taking some consultancy from software developer, etc., etc. Cost incurred in relation to the development, cost incurred in relation to the development of the software product for the year ended 31st March 20x2 are as follows. 20x2 are as follows, right? purchase price of the imported software, right? So this question is talking about a separate acquisition. When you are acquiring goods and services, when you are developing an intangible asset, so it has to be measured at cost. First of all, tell me this purchase price of imported software, whether it will be part of the cost or not.
Yes, sir.
Yes, it will be
Yes, sir.
part of the cost. Yes. So further, just looking at the first instance, I'm telling you it is part of the cost. Employment cost, whether employment cost, employee who are engaged in development of this software, whether this cost will be part of the cost or not.
Yes, sir.
Yes,
Subject
but
to
some note number one is given. We'll look at what is the note number one which is given. But apparently, after looking at this, tell me whether this employee cost will part of the cost or not. Of course, employee who are engaged in the development, their salary cost has to be capitalized, right? But there is a note number one which is written. Shall I read note number one right now?
Yes, please.
The software was developed in 9 months ended 31st December 2001, right? And was capable of operating in the manner intended by the entity. It was brought into use on 31st March 20x2. This software was ready on 31st December 20x1. The only problem is, the only thing is it brought into use on 31st March x2. It brought into use on 31st March x2. But it was ready on 31st March x1. It was ready on 31st March x1. So tell me, when you will capitalize your PPE intangible asset, when it is available for use or when it is put to use?
Available for use.
Available for use.
Available for use. So this employee cost of 1200 was given for the year. These costs incurred, this cost incurred is for the year ended. So the product was ready in 9 months. The cost is given for 12 months. Should I capitalize entire 12-month cost? Employment cost?
No, sir. Only
No,
9
sir. Only
months.
9 months.
Only 9 months. So how will you arrive at 9-month cost? Pro,
1200 divided by 12 into 9.
pro rata, right? 1200 divided by 12 into 9. You only have that option right now. So pro rata, 1200 divided by 12 into 9. Testing cost. And and then it is written also after 31st March, the employment costs are for the period of 12 months, that is up to 31st March, which we have seen. The employees were engaged in developing the software and related activities. Okay. Now testing cost, whether testing cost is going to be capitalized.
Yes, sir.
Testing cost is also going to be capitalized. Yes. Right. Now other cost directly related to customization, 450, whether this cost is going to be capitalized.
Yes,
Answer
sir.
is yes, but we need to look at note number 2. Here note number 2 is written. Let's see what is there in the note number 2. Other cost directly related to development include an abnormal cost of 50 rupee. 50,000 means 50 because the numbers are given in thousands. Okay. Out of 450, 50 rupees is an abnormal cost in respect of repairing the damage which resulted from a security breach. Will you capitalize entire 450 or you will charge 50 to expense right now and 400 you will capitalize? What you will do?
We will
400 will
charge
capitalize.
50 to expense.
Why?
Abnormal
Abnormal
costs
cost.
are not to be capitalized.
PPE standard, Ind AS 16, Ind AS 38 says that PP and intangible asset both standards says that if there is any abnormal cost, it should be charged to P&L immediately. It should not be capitalized. So out of 450, what we will capitalize? Only 400. Professional fee paid for external software developer of 220. What we will do for 220? We will capitalize. We will
Yes,
capitalize.
sir.
Cost of training provided to staff to operate the asset. Training cost to the staff. Whether we
No,
will
sir.
capitalize the training cost.
No, sir. To be expensed.
To be why? If tomorrow the staff will leave, will you be able to
Mm,
recover this training cost from staff?
No control on staff.
No control on the staff. Advertisement cost 15-60,000
The same way.
expensed off. Administrative and other general overheads. expensed off, right?
Expense of.
Administrative and other general overhead has to be expensed off, right? So we understood what we need to recognize, what we not to recognize. So what will be the amount of the software development cost that can be capitalized by explaining the reason for each element of cost. So in this case, this 600 purchase price will be capitalized. 9 months, 900 rupee of employment cost will be capitalized. Testing cost of 1800 will be capitalized. Other cost of 400 will be capitalized. 50 abnormal cost has to be expensed off in the P&L. Professional fee has to be capitalized. Training cost, advertisement cost, administration and general overhead will not be capitalized. They will charge to expense. 39,20,000 is your capitalization cost. Okay. Is that clear? Is that clear? Not clear?
Clear, sir.
So friends, we have covered 6 questions from this Word file. We have also covered a lot of example from Excel file. We have covered all the concepts. We have covered all the concepts from our PowerPoint presentation also, right? So I hope you will be able to get through with the revision of Ind AS 38, even though if you were listening this standard for the first time, or let's say earlier you have heard about this standard little bit, but now you are attending this revision session, I can tell you the concept clarity will be almost 70-80%. I mean to say clarity, when I mean to say means the explanation which I have given in my formal class, it will be 70-80% which is there in this revisionary class also from the conceptual perspective. And we have covered new questions as well in this revisionary class. If you want to understand any concept, please let me know. Otherwise, I will be happy to call out the session in the next 3-4 minutes. Please tell me. Derecognition part, let me quickly cover. If an intangible asset is not providing future economic benefit, an intangible asset is going to be derecognized. In that case, intangible asset is going to be derecognized, and whatever is the income or expense, it has to be charged to. Whatever is the income and expense, it has to be charged to P&L. Other income and other expenses, not in the revenue. Other income and other expenses. Okay. Is that clear? I hope it is clear to everyone. Yes, great. Very good.
I had a question.
Yeah, please tell me.
See, because when I was doing it, so if there are two types of what I can say, there are two classification of assets. One is had revaluation reserve, means it has a revaluation surplus, and other is having impairment loss. So can it be set off with each other, Dina?
No, it
What
cannot
is
be set off. For example, there is a intangible asset which is a software. Okay, software, and there is a license. Okay, software has a revaluation surplus of, let's say, 50,000 rupees. License has an impairment loss of 40,000 rupees. So you have to charge to the P&L 40,000 rupees impairment loss. You have to take OCI, revaluation surplus 50,000 in the OCI. Okay. So you cannot offset one asset impairment loss with another asset revaluation reserve. You cannot do that. Okay. Yes.
whether these fall in the same category, then also we cannot do this.
Sorry.
Whether this means in the group of assets, if it is in the same group of assets, then
No, you can't do that. You cannot offset a revaluation surplus or impairment loss of one asset with another asset even in the same class of asset. You cannot do that.
Thank you, sir. This was a very, it was creating, I solved 2 or 3 questions. It was creating a problem for me.
Thank you so much. And friends, thank you so much. Krishnakant, you have a question on non-current asset held for sale. Please connect with me separately, Krishnakant, right? Over my email. So my email ID is cacs.alokgarg@gmail.com. Okay.
Sir,
Yes.
you cannot provide your email ID to any students.
I have just written Krishnakant. I have written
sir.
on the.
No. You are providing, sir.
You are?
You have written your email ID.
Yes.
That's not allowed, sir.
Acha, that is not allowed? Okay.
Yes, sir.
Okay. So you can write to the Board of Studies of ICAI and of course Board of Studies, through Board of Studies. So they will send to me and I will I will answer to that question. Okay. Right. Yes. Any other conceptual clarity which you need on Ind AS 38? Any other conceptual clarity you need on Ind AS 38?
No, sir.
No. Any questions, Saminathan, on Ind AS 38?
No, sir. You have clearly explained in all the concept in the understandable way. Thank you so much, sir. For
So
your service.
Krishnakant and Manish, any question on Ind AS 38?
No, sir.
Krishnakant? Okay. Thank you so much. So let's conclude the session. Thank you so much for the wonderful listening, and we have completed Ind AS 38 along with a lot of examples and illustrations and everything. Okay. Thank you so much. Bye. Take care.
Thank you.